Okay. Uh, so today we are going to talk about Proposition 19 that is going to be on ballot in California for 2020. And this proposition, it changes certain property tax rules. And this is a summary of what the changes it proposes. We'll go into their details in the upcoming slides. So what does it mean to vote yes or no on this proposition? So if you vote yes, then what you are saying that it would require that inherited homes or inherited properties to be reassessed at a higher rate or market value when they are transferred to the transferee. But if you say no, then you are saying to continue with the current laws and regulations, which allow the tax assessment on inherited primary homes to be transferred from parents and grandparents to a child or grandchild. And there is $1 million exemption on investment property. So this change is something that will adversely affect the current property owners. Another change that it proposes, so if you vote yes, then you would be saying that increase the number of times that persons over 55 years old or with a disability, they can transfer their property tax assessment and increase this number from 1 to 3. Whereas if you say no, then you will be going with the current law, which limits this number to only once in their lifetime. So this change is in favor of homeowners, certain homeowners. Another change that if you vote yes would cause is that it will allow certain eligible homeowners to transfer their tax assessments to a more expensive home with an upward adjustment. So we'll see what the eligible homeowners are, and we'll also see what this upward adjustment means. Whereas if you say no, then the current regulation will continue, which allows certain homeowners to transfer their tax assessment with certain geographical limitations and also to homes of equal or lesser market value. So, and then whatever the revenue change that would happen, if there is any, allocate the resulting additional revenue or net savings to wildfire agencies and counties. So we'll see that this is a kind of honey that is added to actually fool people or attract people to this. And in past, these propositions have been, similar proposition has been attempted without this thing. And so in order to get some support, they are doing this. So let's go into a bit more detail about each of the bullets that I talked, or sections that I mentioned there. So how would this proposition affect the tax assessment transfer? So people who are eligible for this assessment transfer, which is essentially if you're living in a property right now and it has a certain value according to which you are taxed, you can carry it over to a different property if you move. And people who are eligible for this would be like 55-year-old, or people with severe disability, or a victim of natural disaster and hazardous waste contamination as defined by state of California. So, and currently the regulation allows that these eligible homeowners, they can transfer their tax assessment to a different home, as I said earlier, with a certain geographical restriction, to a property of same or lesser market value. So suppose you are living in a property which is currently market value is $500,000, but the tax assessment value is 400K, and you move to another property of same or lesser value, then it won't be assessed at $500,000. You will be able to carry only 400K. But the proposed change, this allows eligible homeowners to transfer this tax assessment anywhere within state, no geographical restriction, and allow tax assessment to be transferred to more expensive homes. So if you were going from 500 to 1 million, earlier you are not able to transfer the lower tax assessment, but now you will be. So if you go from, let's say, 500 to 1 million, 500 was assessed at 400K, and now the additional would be, additional increase is 500K. So your new assessment value would be 900K. So you get some benefit. It's in favor of property owners, but I don't think it is of much value, because people usually, when they move, they are like 55-year-old or someone, they downsize. And so it's good. It's not bad to have, but not of much value. Now, coming to how the inherited properties would be affected by this. So who are those that will get affected by this? Anyone who would inherit properties, either now or like 20, 30 years from now. If anyone is planning on transferring properties to their kids in future, their kids would be affected by this. So current law allows parent or grandparents to transfer their primary residential property to their children or grandchildren without the property tax assessment resetting to market value. But if they have investment properties, then they can also be transferred from parents to child, or grandparents to grandchild, and with the first 1 million exempt from reassessment. So I will go into numbers in the next slide. So there was some limit to it, to how much benefit you can get, but you do get some benefit. Now the proposed thing, it eliminates the parent to child or grandparent to grandchild exemption in case where the child or grandchild does not use inherited property as their principal residence. So suppose you are living in a house right now and your kids are in East Coast, and you want to transfer the property, they inherit your property later on, and they cannot move back to California, then they won't be able to claim this benefit. So it will get reassessed at a much higher value. Another thing is that if the inherited property is used as a recipient's principal residence, but has a market value difference more than 1 million, then an upward adjustment will happen. We'll go through the math to understand what this really means. So again, here they are limiting the benefit that whoever will inherit the property, they will be able to get. So an example to show what upward assessment and what the various exemptions are. So let's say parents, they transfer their home to their child. And before transfer, the taxable value of the house, or the tax assessment value of the house, is, let's say, 750K. And let's say current market value of the house is 2 million. In future, it is possible, like it's just a number. And so 1 million difference is exempt from reassessment. So if the increase in taxable value after the transfer that happens is 2 million minus 750K, which is here, and you get 1 million exemption, that gives increase in taxable value will happen 250K. So taxable value under the new law or proposed law would be 750K plus 250K, which would be 1 million. But under the previous law or existing law, it is 750K. So, but if they are not able to use this property as a primary residence, and they decide to convert it to investment property, then none of this benefit would be there. So then it becomes more costly. So 1 million exemption under existing system or old system, removed under proposed system. So taxable value under proposed system would be the current market value, which is 2 million. And taxable value under existing law would be 1 million, right? It is fixed. It's like the 1 million exemption that you get on any investment property. But if even if they transfer the primary residence, then it would be 750K. So in all, from this number, we can get that in this scenario, which will be very realistic in coming future, there'll be more than 10K increase in the tax bill. So let's look at what would be the, if it's costing to homeowners, then what is the benefit that state is going to have? So I have certain quotes from the discussion of this bill on California Assembly floor. So before voting on this bill, they had a discussion in both Senate and Assembly. And there is a document here from the California Assembly where you can access. So I've just copied a certain key section from there. I haven't added my opinion or haven't altered it. So this reads as follows. One comment was an unknown impact on state revenues and expenditures. This measure is likely to increase home sales. This is very key. It is likely to increase home sales, thereby increasing income tax revenue by an unknown amount. Moreover, an increase in property tax revenue going to schools will decrease state funding for schools by a corresponding amount. So what they're saying that if let's say in the city of Irvine, the property tax revenue increases, so school funding is not going to get any benefit from this. State is going to siphon that money right out. And another comment was there that they will increase the general funds to support California Fire Response Fund and County Revenue Protection Fund, some county funds. The amount transferred to both the funds would depend on this measure's impact on state revenue and savings. And as indicated above, the net state fiscal effect is unknown and would need to be calculated by Department of Finance. However, it is likely this measure will lead to a transfer of at least tens of millions of dollars each year. So my take from this is that they haven't done the calculation. This was actually passed very late, end of July, I think, or end of June, something like that. And they are just hoping for benefits they are highlighting. So there is something else underlying it. And if we go to see who the supporters, donors, and opponents are, then it gets a little bit more clearer what's going on. So donors for yes, there's about 20 million fund collected for this, and it has been contributed by only two groups here. You can see California Association of Realtors, Issues Mobilization PAC, and National Association of Realtors. And this has been already passed by 2/3 vote in both chambers of California State Legislature, and it is like now it's going to be on the ballot for people to accept or reject it. And how did Orange County senators or assembly members vote on this? So let's see, like 2 Republicans senators, they did not vote on it. They abstained from it. 1 Republican voted no on this, and 2 Democrat senators, they voted yes on this. And if you look at assembly members, 3 Republicans, they abstained from voting, including Stephen Choi, and 2 Democrats abstained from voting. And incidentally, these are the only 2 Democrats who abstained from voting in assembly on this, and they're both from Orange County. 1 Republican assembly member voted no, and 1 Democratic assembly member from Orange County voted yes on this. So this thing is supported by Association of Realtors, not like any other issues group or people in California. So that should give some indication of the intention behind this. There are 2 media editorials that I could find on this, and I have copied them here. I will read through this. One was on Orange County Register editorial board, says that, but Prop 19 is best understood for what it is, an attempt by real estate interests to accomplish what they couldn't accomplish 2 years ago by pandering to states' firefighters union. This is a special interest measure that seeks to raise hundreds of millions of new tax revenue to appease yet another special interest. Prop 19 has one good feature, portability. Counties ought to enable it forthwith, as a few already have done. But Prop 19 is a cash grab, not tax reform. It's not fair to property buyers, and it buys off a union, so it has better chance of passing. Vote it down. So yeah, you can see that it is mostly sponsored by real estate interest groups, just to grow their business. Nothing more to this. Another editorial is Prop 19 merely plugs one hole in the state's porous property tax laws while creating another. It's time for holistic reform that simplifies the system and makes it more equitable. This isn't it. So this is not solving any like property tax loopholes. It is not meant to do that. It is just hiding behind that. The longer a person has owned their current home and already benefited from inordinately low tax bills due to Prop 13, the greater the tax break on the new property. And those who downsize would often be competing with first-time buyers for more affordable, smaller homes. The real reform would be to abolish tax transfer program. So they are also saying vote no on Prop 19. It's not a holistic. So here are links to sources where I got these information. Ballotopedia has a section on it which has a lot of information. Also, there is a link which has summary of all the propositions that are going to be up for ballot, and this is a link to bill analysis on the assembly floor and Senate floor. So like Prop 15, we'll be posting this slide also on OC Hindu website. And so whoever is interested in getting these links can get it from there. That concludes this presentation.